So good morning, everyone. Before I really start my presentation, I just like to do a quick little thing which demonstrates to you why we are all in this business. And so what I'm going to do is I've got a note here, it's 20 dirhams. I'm going to leave the stage, walk across, hand it over to Abdullah, my chairman. At least I know he's going to give it back to me, right? And then come back to the stage. So what did I just do? I did a payment transaction, right? It took all of 2 seconds. It's irrefutable. Abdullah has the money. He can spend it right now, right? And that's what we are competing with in this market. So every time we talk about different things, and we talk about, we've got to make sure it's easy, quick and simple, anonymous, ubiquitous, and it's irrefutable, right? That is what we compete with when we look at payments in this industry. And we've had evolution in the payments industry over the years. And this first thing that we came out with was the card, which is a really simple tool to use. And to date, I don't think anyone's really dethroned it. But as we start to look at what's happening in the future, I think we start to notice more and more how payments are evolving. And so why do we really care, right? We care about it because the market is growing rapidly. We see there's a big shift towards e-commerce and omni-channel transactions, and more people, as the gentleman from Samsung Pay just spoke about earlier, are migrating to mobile platforms. Again, as banks start to look at this, they say, hey, if this is not my core competence, do I outsource this capability? And then we've got the expanding payments ecosystem, which is now moving across payment lines, from the traditional cash payments and from the traditional paying a vendor to actually including things like loyalty. We look at our government out here in the UAE and we see that they're actually doing a lot on the smart government side, e-dirham facilitating payments to cashless payments. And so that's why we as banks and financial institutions care. It's also interesting that when we look at the relevant geographies for us, the majority of transactions today take place by cash, right? And so how can we look at migrating those cash transactions across to card transactions, electronic transactions, and other facilities so that we as financial institutions can take a part in those transactions? And then finally, of course, when we look at credit cards, I think we look at the Middle East and Africa, and these are geographies that are just at the bottom of the S-curve. Look at all the countries on the top of the S-curve, the US and things like that. These are countries where card transactions dominate, electronic transactions dominate, and you see, cash is generally relegated to a secondary position in most people's wallets. So this is an interesting slide, right? Because we start to look at what's happening, what's the evolution in payments. And notice here, there's no bank involved. And this is ironic because as we start to look at where payments are migrating, more and more it's becoming technology companies, it's becoming facilitators. Most people think about the evolution of payments and say, where are we moving to in the future? And they talk about mobile companies. You've got Apple Pay, you've got Samsung Pay, Google Pay. Nobody's talking about Bank A Pay or Bank B Pay, right? And that I think is a fear, because I was at a presentation recently with a large bank in China, and the China Merchants Bank, and they were talking about, their CEO was at a presentation and he was listening to what's happening in payments. And the people were talking about the fact that, hey, this is Apple Pay, Samsung Pay, Google Pay. And he says, not a single mention of a bank. And he came back and he said, guys, we've got to take back this industry, right? Because otherwise it's all migrating onto technology. And I think most of the banks that start to adopt this technology are then starting to look at how they can get into the space. So how we collaborate across these. So what's happening on the movement of money? Disruptive change, right? I think both my predecessors on the stage have already spoken about disruptive change. But you've got new business models migrating to mobile platforms, migrating to NFC transactions, RFID chips on cards, things like that, right? So talk about convenience. That's the big driver of that. And new customer interaction models. Remember the good old days where you only bought something when you went into a store, right? Now you can sit in your pajamas, drink your cup of coffee, and make a purchase online. Where does that evolve to? I'm wearing a little watch out here, which arguably can facilitate payments, right? And so where are we going on that piece? Ultimately, what we think is going to happen is we're going to see a big merger as mobility is going to blur the lines between financial institutions and retailers, right? And you're going to start to see a big convergence of those pieces. So this is, driven by convenience, driven by the fact that people want a secure transaction, easy to do, and rapidly deployable. So how has this evolved over time, right? You've got the traditional POS, that's where we started off, migrating onto tablets, smartphones, digital, mobile wallets, and where else are we going? So we've got now the Apple Pays, the Google Pays. What's going to come next? And really, when we look at what's going to define the next generation of digital transactions and digital payments, I think a lot of these facilitators are going to drive that generation of change across the entire platform. Not just that, but we've got to make sure that all of these facilities actually allow you to provide value add. The gentleman from Samsung Pay said, it wasn't enough just to actually have the payment take place on the mobile phone. You want to make sure that now you provide value add, migrate across to different things like providing transit, providing contactless payments, those kind of things. And really where it does, it starts to blend everything together, bring marketing, shopping, product, payments, service. The ability to do a transaction online, collect in a store, or actually initiate a transaction online, complete it using your mobile watch, and then finally actually pick it up in a store. That's omni-channel. That's where we allow people to seamlessly go across different channels. And that's where we're moving to in payments. We've seen more and more of these things. We are looking at banks, and banks are migrating towards branchless banking, right? So this is virtual teller machines that the consumer actually controls the environment. You can decide who you speak to. You can decide, I want to speak to a lady, I want to speak to a guy. You can decide what they look like, right? All of that environment can be controlled by the individual, and that actually allows people. So I think the first speaker had mentioned something about millennials not wanting to go to banks. Banks are trying to look at how they get them back in, how they build that relationship. I think most people want an anonymous transaction. They don't want to really interface with human beings. They don't want the hassle of having to abide by timelines in banks, and that's really what is driving this. So this is where the banks, financial institutions are migrating to. They were built for the physical distribution of paper in a localized network, right? And that's where banks, so you always went in, you interfaced. I remember from my grandfather's days, they went into a bank and it was a big relationship. It was an event. You went into a bank, you sat down with your banker, you interfaced with them. And from that, financial institutions are now needing to migrate to a digital distribution of data in a globalized network. Let's face it, your bank, you want to have that relationship with them wherever you go. And people are becoming increasingly mobile. They want to make sure that they have that ability to go across borders and take these transactions with them. So a couple of quick examples, right? The branch transformation. We've gone from high cost, high risk, people-intensive branches, long lines, waiting in lines, to migrating across to an interactive, customer-oriented environment. So people walk in, they interface with the machine, they talk to someone, they will see a live person if they want to. If they don't want to, it's complete anonymous transaction. They go in on their timelines. We've got, similarly, the way corporates interact with the teller machines is actually they walk in there, they can actually insert their money inside, get instant credit, and all of that transaction takes place in an anonymous manner at the time that they want to do this transaction, not at a bank's timing. So finally, I think as we look at the ecosystem and where it's going to evolve to, I just have a few quick thoughts on what I think is going to drive this, right? And so this is merchants. I think mobile apps, not mobile payments, right? So mobile payments is a great starter, but after that, as we migrate across, get into applications so that you can then combine all of these things. I think the gentleman from Samsung Pay mentioned they want to bring loyalty in. They want to bring in the ability to order, to do beacons. And I think we've seen examples of this taking place even here in the UAE. If you look at what EPCO and ENOC announced a while ago, they announced a little VIP card, right? As banks and financial institutions, I think that's a tremendous driver for us. Give it away to our customers. Tie in their credit card to that VIP card. So you walk into a fuel station, you pump gas, it's convenient, the merchant likes it, big throughput, you walk away quickly from there. The consumer likes it, they don't have to get down from the car, enter in their PIN, They just drive away. And finally, the financial institution likes it because it was a cash transaction that's migrating to a card environment, right? So these are examples of where we can move this on. The networks will have a big play in this. It's gone are the days when it was the financial institutions that are driving this. You see now more and more mobile platforms are driving this. And of course, that creates a potential threat of disintermediation for most financial institutions. And we need to take that back as a financial institution. Of course, the issuers then start to merge with all the application providers. So look at Uber. I mean, Uber changed the way that we do transactions. Earlier, it was you get into a cab, you wait, you pay cash at the end of the journey. Now you get into a car, drive off, get to your destination, walk away. No financial transaction. Everything's happening behind the scenes. Consumers, for them, of course, the big thing is relevance. And I say this oftentimes with due respect to all of our colleagues in the mobile payment space. I think, pulling out a card, swiping it, for me, is just as easy as taking out my mobile phone, tapping around, trying to get my fingerprint on it, and facilitate a payment. Add to that the fact that I have to enter my card information in the mobile phone, which is another nightmare. So again, just solving a swipe with a tap is not going to be enough. It's how we bring all of these value-add services in together in the mobile space. And finally, of course, for us, as the merchants and acquirers, the big thing is going to be the Internet of Things, the ability to go omni-channel across multiple channels so that a consumer never fears doing a transaction, complete secure manner. And of course, with the Internet of Things, we look more and more at how everything is going to be facilitated online. And this is where it's going to drive the information. So with that, I want to say thank you. It was wonderful talking to you, and we're looking forward to having an exciting few days out here. Thank you.